On the show. So first up, let's talk about Aarti Drugs. That one posted a mixed set of earnings. The company saw a 20% year-on-year rise in revenues, even as margins came under pressure. It was the specialty chemical segment that saw very strong growth, followed by the API and formulations business. We have the management, in fact, Adhish Patil, who's the Chief Financial Officer at Aarti Drugs, who joins in now to discuss more on the numbers. Adhish, happy Diwali to you and your team at Aarti Drugs, and thanks for joining us on CNBC TV18. I want to first start with the margins, unfortunately the sore point this quarter. Can you tell us what impacted the margins this time around, and if there is an improvement that you're expecting, by when can it flow through?
Okay. So the main problem again for this quarter was gross contribution. So that remained subdued. It did not improve, and we were expecting some kind of increase in the September quarter against June quarter. But we definitely think that around couple of percent going forward, gross contribution can increase. And however, on the standalone business, that is the API and specialty chemicals business, we have already improved on our production efficiencies and the overhead parts. So that so the EBITDA of standalone business had gone up by 1.2% on sequential basis. But then the other inflationary factors like coal and power, that remained very high even in this quarter.
So what would you expect then in terms of the margin going forward?
Yeah, so one is about coal. Coal and power are going in tandem because coal prices have gone up. So around 7 crores is only the rate variance per quarter what we are facing. And the EBITDA margins, we hope that we will be crossing 15% EBITDA margins at least by the end of the year, means not on the entire yearly basis, but on the quarterly basis. And next quarter also, we are hoping to see some kind of improvement.
Hi, Adhish. Morning. What were your realizations for both API and specialty chemicals, and what is the sustainable rate for you?
Yeah, so again, because the raw material prices were increasing, partially because of the war factor also, the September quarter had seen the maximum selling price realizations for the quarter, both in APIs as well as specialty across the board. It's almost you can say around 80 to 90% of the products, the prices were maximum. But now going forward, because the raw material prices are slightly coming down, we can expect some bit of pricing correction in the APIs as well. And overall, it should be beneficial for the pharma chain, because ultimately the entire chain needs to make profit, for the business to prosper.
I think another issue that, of course, the street has been concerned about is the high working capital requirement that the company has, and that has perhaps led to higher debt as well. What is the consolidated debt figure at the moment on the books of Aarti Drugs, and do you plan to bring it down, or do you think debt would continue to remain elevated?
Okay. So consolidated debt is around 582 crores, out of which long-term is only 187. Rest 395 is because of the working capital, as you correctly pointed out, that our operating cycle has gone up, and we will be bringing down the inventories now. The thing is, the Q1 and Q2 quarter are supposed to be the best quarters, but then for some reason, the domestic demand hasn't been good. We have seen only a marginal increase of 2% as far as volume growth is concerned in the domestic market, though export was very good. In export, we had a volume demand of more than, a growth of more than 11.5%. So that was the reason why we had piled up the inventories, because we thought the higher demand will come soon, but that did not happen. So that is the reason why the working capital looks slightly higher, and definitely it will come down.
Okay, 11% is what you saw for the export market. Can you tell us overall for API what you're expecting in terms of growth for Q3, Q4?
So the thing is, the composite growth is already around 20-22% for the API and spec chem business, because of because we got a rate growth as well. So going, we feel that for the entire, on a yearly basis, around 15% composite growth is achievable for us.
What about formulations? As of now, it's 12% of sales. It's grown 9% year on year. What is the future here? I mean, I think your core focus right now is exports, right? What do we expect from formulations going forward?
Yeah, so for formulation business right now has stabilized quite a lot. It is a profit-making business on its own, which is a good thing. In fact, we a few years back only we separated our formulation business into a separate subsidiary, so it works independently. Going forward, we are coming into oncology segment as well. We do a lot of backward integration in the sense that we procure a lot of APIs from the group companies, so which gives an additional benefit for us, and we are registering in across the globe. We are registering a lot of products, more than 350 SKUs, and definitely it should go beyond 50-60% of the total. For means export should be around 50 to 60% of the formulation revenues, and it is the formulation it is the exports where we get better margins as far as formulations are concerned. So definitely it's a very lucrative business for us.
So this 15% composite growth you said, that is for the entire business, right? For the full year, that's what you're looking at?
Yeah, 15% on a yearly basis.
On a yearly basis, got that. Now, the reason I asked is because you also have some capex coming on board in your Baddi Oncology plant. So what is the revenue estimate from that, and when will that start to flow through?
Yeah, I think majority of the sales will come in the next financial year, not this. And even our 2 greenfield capex are going on. So one of the Tarapur one, which is a API derma product, that will be commercialized by the end of Q4. So won't contribute much in this year. And the second one, that is the backward integration project in Saika, Gujarat, that will come online by, say, the end of Q1 of next financial year.
All right, Adhish, we'll leave it at that today. Thank you very much for joining us and taking us through your outlook going forward. So around 15% growth for the full year is what the company is looking at. They're also saying that they could cross margins of 15%. So that's significantly higher than the around 10.8 that we saw this quarter. That is the management of Aarti